Hey everyone, today we are here to talk about how to buy a home here in Maryland, and let's get started right now. Welcome back to the channel where we talk about all things living in Maryland. So if that's the kind of information you're looking for, make sure to hit the subscribe button and hit the bell to be notified of our weekly new videos where we do just that. And if there's ever any real estate questions or anything I can do to assist, feel free to reach out to the number that you see here on your screen. I personally answer those calls and texts and would love the opportunity to talk to you. Let's get started. So first off, I just kind of recommend that, everyone just kind of start online, which you're going to naturally do anyways, right? But that's a great way just to kind of see what's out there, what homes are in your general price point that you think you're going to be in, just to get a feel for what's currently in the inventory. Now people ask me what the best site is. It really doesn't matter. It really comes down to user preference, whether it's Zillow, Realtor.com, Trulia, or any of those. It really, as realtors, we are giving permission and we're sharing all of our inventory with these sites. So you really should be seeing the same homes on all of these sites. It's really more of just a difference in their website platform and the layout of that information. But I also liked to let people know exactly kind of how the third-party sites work, such as Zillow, Realtor.com, and all of them for that matter. So it's a great way to see what's out there. But just know if you're going to ever submit an inquiry or you're looking for further information at any point when you put in your contact information, how they make their money is selling that to other realtors, and a lot of times multiple realtors per inquiry. So as soon as you hit submit with any kind of your contact information, you should expect calls, text messages, and depending on the individual, person, that may continue for, days, weeks, or months at a time. So that's just something to keep in mind. It's a great resource and a great spot to get started and see what's out there. But just kind of be aware of how those sites work as well. And once you feel like you're getting a little closer to actually being ready to start looking, the next step that I always recommend is speaking with a lender. So speaking with a lender is going to allow you to just kind of get the ball rolling on what financing options are available to you. This does not commit you to purchase a home. If you do a pre-qualification, pre-approval, they're really fairly similar. A pre-qualification is more just a phone conversation, them asking you certain questions like your employment history, your income, checking out your credit. A pre-approval was kind of the next step to where they're actually getting documentation from you, like your bank statements, pay stubs, and things like that to actually start the verification process. So that's kind of really the difference between those two, but that's important just to know exactly what your capabilities are. And also the bank in most cases is going to approve you for, maybe, more or a lot more than what you actually want to spend. So I'm always encouraging buyers and telling buyers to start having that conversation with yourself or with your partner, who, if you're purchasing with somebody else, identifying where you want your monthly payment, right? And this is important because from there you can build out your pre-approval around that number. And that's important because there can be a lot of variables. If you're looking at condos or townhomes, if there's HOAs, or different counties within Maryland, property taxes are going to vary. So discussing where you want your monthly payment and building your approval around that, it tends to be the safest and most conservative way to go, so that you're not just saying, all right, well, we're approved for $300,000, but that can vary a ton if the taxes are different, if there's a significant condo fee versus a property that does not have a condo fee. So those are things that can be helpful, so that once you're actually ready to start looking at homes and you're walking in doors, you're not walking into a home and the payment is $200, $300, $400 more a month than where you want to be. So that's a great place to start, just to kind of know where you want to be and that you're looking actually where you want that payment to be. Just a full disclosure, I'm not a lender, I'm a real estate agent, but I do have a good amount of experience in the loan world and just kind of how they work for doing this for several years. So just a quick little breakdown and explanation of the different financing options. almost everybody is using either FHA, conventional, or VA if you're a veteran. So these are all great options, but just a few little differences just so you kind of know what may be a good place to start. FHA is a great product. A lot of times it's for first-time home buyers. Things you want to know about: it does have an upfront mortgage insurance fee of 1.75% of the purchase price. So that's something you want to be aware of. It's not something you pay up front with your closing costs. It's something that's always rolled in to the loan. But that is something you want to be aware of. So the more expensive the home, that's going to start adding up. It's going to be several $1,000s if you're buying a $300,000, $400,000, $500,000 home. You can only have one of those at a time. So if you currently have one, you're not going to be able to keep that home and then use it again. So that's something you want to be aware of with FHA. When it comes to mortgage insurance, or more commonly known as PMI, so that's private mortgage insurance, all that is that if you are putting less than 20% down on a home, which a lot of people are doing, that is insurance for the bank to protect them against default, the borrower defaulting on the loan. So it really adds no value to you as the buyer or the borrower, but FHA's is a fixed 0.85% of the loan amount for the life of the loan. And a few years ago, FHA changed their rules. You can no longer get that removed once you get to 78 to 80% loan to value, where you actually have 20% equity in the home. So you literally have to refinance or sell that property to ever get out of that fixed monthly PMI. Conventional has a lot more options as far as mortgage insurance or PMI is considered. So if you have strong credit, a lot of times that's going to make more sense, because the mortgage insurance can be as much as half as far as a monthly cost when compared to FHA. So that's something that you want to keep in mind. It usually doesn't make as much sense for people who don't have really strong credit. So if you have in the low to mid 600s, a lot of times conventional is going to be more expensive because they price their mortgage insurance tiered on credit score, whereas FHA's is just a flat. So if you get approved for FHA, it's a fixed 0.85% of the loan amount for the life of the loan, but conventional tiers it based on where your credit's at. So the better your credit, the better the cost of the monthly mortgage insurance is. Another thing that a lot of people don't know is with conventional, you can do a one-time buyout at closing. Usually I see it for buyers. It depends on the loan amount and the overall file, but a lot of times it comes out to around $3,000 to $4,000 as a one-time buyout, and then you're done. And with conventional, there is no upfront insurance charge either, like there is on FHA. And then VA is a great option if you're a veteran. It does have what's called a VA funding fee, which is 2.3% of the purchase price. And again, like FHA, that's wrapped into the loan amount. So most people are not buying that or paying for it rather upfront, but it is something you want to be aware of because it adds to the overall cost of the loan. And then the nice thing about VA as well is that there's no mortgage insurance. So it's a great product. It helps a lot of vets get into homes for not a lot of money out of pocket. And it allows the seller to pay all of your closing costs, which is great. So the technical rule is 6%, up to 6% of the sales price can be given to you from the seller. So really they can cover up to all your closing costs. FHA is the same, allows the seller to pay all of your closing costs, and then conventional, depending on how much you put down, they will restrict that. If you're 10% or under, they restrict you to 3% of the sales price from the seller. And then if you go above 10%, I believe they bump that up to 6%. So there's just these little differences, but hopefully that kind of gives you an idea of the differences between the programs so you can figure out what's the best fit for you. In Maryland, there's still some counties, depending on where you're at, especially like Carroll County, that's a little more rural. They have USDA options. So USDA is a great option to see if you can get that, where it requires no money down. And then there's a little mortgage insurance, but it's very affordable. But it is a zero money down option depending on the location, and if it's available, that's something that you may want to look at. All right, let's talk costs. What does it cost to purchase a home here in Maryland? So I'm going to try to break it down as easy as possible. So really you have, if there's a down payment required for your financing, you're going to have that, right? And then you're gonna have the cost of your inspections. So most people are doing a general structural mechanical inspection, which is gonna run you about $400 to $500 on average. In Maryland, we always recommend radon because we do have that in our region here. And then termites always recommended. Radon, when you bundle it with your general home inspection, is usually an additional $100 to $150 depending on the inspector. And then termite, it ranges from $35 to $60, and that's very affordable. In Maryland, our state contract has built into it that the seller is responsible for any termite treatment or damage that's brought to them. So it's always in your best interest as a buyer to get that done, although FHA and conventional financing do not require it. VA does. So if you're doing VA financing, you're gonna have to get the termite no matter what, and the seller's responsible for that. But FHA and conventional, you're not gonna be told by your lender that you need to get a termite done. So that's something that you just wanna be aware of in case you wanna get that done. And then the next part is your closing costs. So it's tough to say exactly how much that's gonna cost because it's really gonna depend on your purchase price. But it usually ranges from $8,000 to about $12,000 depending on your price point. If you're in the $300,000 to $400,000 as far as purchase price, it's gonna be in the $10,000 to $12,000 range. And I know that's a big figure, so let me just break that down for you real quick. Anytime you're using financing, there's usually around $1,000 fee from the lender in what's called underwriting and processing. So you're always gonna have that. They charge you to run your credit and review your credit. There's always a small, and it's like $15, $20 for a flood certification to ensure you're not in a flood zone. So those are lender fees. Then you have your escrows. Most of you are gonna escrow, which means that you make one monthly payment to the bank, and then the bank on your behalf is gonna pay out property taxes and homeowner's insurance for you. In order for the lender to do that, they have to collect money at closing to make sure there's enough money to pay that moving forward, and the day you close to make sure that you are current on property taxes and then pay out your full first year of homeowner's insurance. So escrows are gonna be a little chunk of your closing costs to get that started, and then you'll be able to follow your balance on your monthly statement. It's always gonna show you what your escrow balance is. The next portion is your title policies. Anytime you get financing, the lender mandates that you purchase them a title policy. It usually is around $600 to $800, and that's gonna protect them once you close. If there's any title defects that arise after closing, that's gonna protect the lender against those. And then an owner's policy, which is actually not required for financing, but it's highly recommended. It's gonna do the same thing, but for you as the owner. And these policies are for as long as you own the home. So the owner's policy is usually a little less expensive than a lender's policy, but it's gonna protect you post-closing against anything that could possibly come up as far as a title defect. Next are your transfer taxes. If you're a first-time home buyer in Maryland, so if you've bought a home outside of Maryland, you're still gonna get the first-time buyer credit of the exemption of state transfer tax. State transfer tax is 0.25% of the sales price. So as a first-time buyer here in the state of Maryland, you're not gonna have to pay that. That's Maryland saying thank you for purchasing a home. And then any subsequent purchase or sale of a home, you're gonna actually pay that 0.25% on the sales price in what's called state transfer tax. And then the other portion of transfer taxes is usually around 1% of the sales price. And that makes up the other portion of transfer taxes. So if you're buying a $300,000 home and you're a first-time buyer, your transfer taxes are gonna be around $3,000. If you are not a first-time buyer, they're gonna be around $3,300 or so. And then there's what's called a land survey. So a survey is gonna tell us exactly where the property lines run if you're purchasing a townhome or a single-family home. So this is something that is very helpful just to make sure that before you sign the dotted line and become the new owner, that there's no neighboring sheds or fences running through your property, to make sure that that all looks good before you become the new owner. So when you bundle all those things together and add that up, that's gonna be what your closing costs are, and that's where that number is coming from. Okay, let's talk first-time home buyer assistance programs. Just quickly to let you know what we have here in Maryland. The most common one is called Maryland Mortgage Program. So if you're speaking to a lender, ask them about MMP, Maryland Mortgage Program, and they should know what you're talking about. The most common one for that is really, it's still an FHA loan, but then the state of Maryland is stepping in and they're giving you 4%. That's the most common one. So that would cover your 3.5% down payment and then give you an extra 0.5% to utilize towards your closing costs. And that's a pretty common one here in Maryland that you have access to. Now, you do have to be within their income guidelines, and they do that based on household size. And then you also have to have meet their credit guidelines, which I believe currently is you have to have a 660 middle FICO score or higher to be able to qualify for that. So if you think you have that, and then the income qualifications are pretty generous. So most people can qualify there. It's usually the credit criteria that comes in where you have to see if that's something that you think you can meet, and then that would be a great option if you don't have cash for a down payment. So once you've spoken to a lender and you know what your financing options are, the next step is going to be to start looking at homes, which is the fun part, right? So most people are going to use a realtor if that's the way that you end up going. You might want to start interviewing and talking to realtors to find a good fit. And in Maryland, a realtor can show you any home on the market. So typically that's the easiest way so that you can have a one-stop shop and not have to deal with multiple people. Once you are submitting offers and you actually get an accepted offer, close time is typically 30 to 45 days. Now that's really driven by the lender and how quickly the borrower is getting everything that they need. So the quicker you're able to get stuff to the lender and the more that you do up front, this is going to help you close sooner if that's what you want. If you're waiting till you actually get an offer accepted to start submitting documents, it's usually going to trend about closer to 40 to 45 days to be able to get that done. Now, I do want to be honest with you. The loan process can be a pain in the butt. So, but they're not picking on you. I promise. I always tell this to my buyers. So all these loans, FHA, conventional VA, they are all federally insured. So these banks, they're all working with the same guidelines. And they just ask for so much. So I just like to prepare people for that up front, so you're hopefully less surprised once you actually get into the process. But they're gonna ask you're gonna wonder why they keep asking for stuff all the way up until a few days before closing. It's just gonna be constant, updated pay stubs, letters of explanations for this $400 deposit. Where did that cash come from? It's just, and it's just the way it is because these loans are all purchased on the secondary market by the government, and they have to meet certain criteria in order for them to purchase them. So the lenders all follow those very strictly. So that's something you just want to be prepared for. In Maryland, we are at the table state, meaning when you are at the table signing your final documents, ownership transfers right there. So you're going to walk out with keys and the home is going to be yours. So I hope you found all this information helpful. Again, if you are interested in all things living in Maryland, make sure to subscribe for our weekly videos. And if you ever need anything at all, please feel free to reach out, and we'll see you at the next video.